You're watching focusIR. I'm Thomas Warner, and I'm talking today with Adam Davidson. He's the CEO at Trident Royalties. So firstly, a very warm welcome to you, Adam. Great to have the chance to have a chat with you again today. We have had some news from you just this morning out of Thacker Pass, your lithium project in Nevada. We are going to be delving into that momentarily, but just for the sake of context, could you start by just telling us how significant a part of the Trident Royalties portfolio Thacker Pass is expected to be once production does finally get underway?
Yeah, so it's our largest asset on a single asset basis. Probably the easiest reference point is the analysts that cover Trident. I think they ascribe, it varies based on their lithium price assumptions, but anywhere from about a third of Trident's net asset value to up to 40%. So our most material asset, a very significant asset for us.
Okay, then, yeah, so very important bit of context that. And today's news then, very, very welcome for the business. The announcement of a $2.26 billion loan from the US Department of Energy, really helping get that project over the line, or at least helping the first phase of it over the line. So you must be absolutely delighted, I'm sure.
Yeah, absolutely. Yeah, there were sort of two kind of key aspects that we were looking for in this announcement. So it was well known that they had applied for a DOE loan, and we've been saying for some time that this is a significant asset on a global scale, important to the U.S. in particular. So good to have seen this come to fruition. I think from our perspective, kind of the key question was, after the bifurcation of the operating company, Lithium Americas and Lithium Argentina, the asset now resides within Lithium Americas, and it was a sub-billion-dollar market cap company. So to go out there and need to finance a $3 billion project, while we were confident that it would get there, without the DOE loan, you need to go through commercial banks and raising equity, and that could have led to some financing delays. As I said, we were comfortable that the asset would get there. It's a high-quality asset, but it would be a higher cost of capital for the operator, which puts a bit of a burden on them, and there's likely financing delays. So what we've seen with this DOE loan coming through is effectively the U.S. government's funding the bulk of construction here. Between the $2.3 billion from the DOE loan and then the $330 million in tranche 2 funding from General Motors that's expected to be released alongside or slightly in advance of the DOE loan. And that by and large covers the CapEx when coupled with roughly $200 million that Lithium Americas has in cash on their balance sheet. And any shortfall is pretty manageable, at least from a royalty holder's perspective. We're not worried about that. So it provides a lot of certainty on this asset. And perhaps more importantly, the way we're looking at it, we've been saying, as I said, for some time that this is a globally significant asset. I think everybody can see that now. We've never seen the U.S. government, or at least I haven't seen the U.S. government delve into financing mining projects like this before. It speaks to the importance of the asset to the U.S. economy. We've seen them do it in other sectors. Most recently, sort of the CHIPS Act for microcontroller and microprocessing chips. Those are critical for the U.S. to have a secure source of supply. And it's equally important for the U.S. to have secure supply of lithium, and we'll now have that with this project moving towards construction.
Well, absolutely. And you're moving towards construction, moving towards production, hopefully in 2027. Is it a case for you guys of just sitting back until then and wait for the money to roll in, or are you going to be actively involved with the project in any other way between now and then?
Yeah, one of the beauties of the royalty model is, we've got certain rights within the royalty deed itself in terms of site visit and reporting rights and those sorts of things. So we'll obviously be keeping tabs on their progress, and we've got a good relationship with Lithium Americas. That said, we're not the project operator, and that's an important distinction. We like to flag that royalty companies have incredibly low overheads, and effectively at the growth point at which Trident sits today, any incremental dollar in revenue effectively flows straight down to our bottom line because there's no sort of additional cost that comes with increased scale or increased revenue. We're a $140 million US dollar market cap company, and we've got 6 employees. One of the biggest players in our space is 25 billion market cap, and they've got 38 employees. So we would never just sit on our hands. We're obviously always monitoring our portfolio, managing it as best we can, and constantly looking for new acquisitions. But equally, we don't have to now mobilize a team of dozens or hundreds to sort of assist with the project. We are, in that sense, a passive stakeholder.
Absolutely, yes. That is one of the big benefits of the model that you're using there. But of course, you're not entirely without risk because, as we've seen, the lithium market has been a little bit in the doldrums, and we don't know, of course, what the world's going to look like in 3 years' time. So that must be something that you're keeping a close eye on, I would think.
It is, yeah. I mean, the key for us is you have to buy these assets well. So we priced in a pretty conservative lithium price at the time. We were using a $12,000 long-term lithium price. Even though it's in the doldrums today, it's in sort of the mid to upper teens. And I should emphasize that's for delivery of lithium into China. It's still a maturing market. To put in perspective, less than 1 million tons of lithium was produced last year, whereas about 25 million tons of copper was produced last year. Now, lithium is expected to grow. Demand is expected to be about 3 million tons by the end of the decade. So 6 short years away, we need to see a tripling of production. That's pretty significant. But I think what you'll see is the price will continue to yo-yo around. Yeah, I don't expect, and nor would I kind of wanted to hang around sort of the $80,000, $90,000 level that we saw in 2022. But I also don't think that it's going to stay at these levels. What that means for us as the royalty holder, there will be some really banner years where we're making tens of millions, and there will be some leaner years. The importance really comes down to bought the asset well and to have royalties over good defensive assets that can survive the cycles. Thacker Pass, depending on the sources that you're looking at, is expected to be a first or second quartile asset from a cost perspective. So, over half of the lithium mines of the world would need to shut down before this one shuts down effectively. It's that competitive from a cost perspective. Probably the only final thing to flag on that too is we all reference sort of the delivery to China price. Whereas if you look at delivery to Japan or Korea at the end of last year, I think Japan was $35,000 a ton in November and actually ticked up to $40,000 a ton at the end of the year. This is going to be U.S.-produced lithium that's going to go to General Motors in the U.S. What the pricing mechanics look like, I think, is a little bit TBD, given it is a maturing market, but suspect that this one is a little more defensive relative to some other production around the world.
Thanks, Adam. Well, one market which has been extremely bullish over the last year or two is obviously uranium. There has been some talk on the boards about whether or not you'll be interested in trying to pick up any opportunities in the uranium space. Is that something that you are evaluating at the moment?
No, it certainly is. Yeah, I mean, I'd highlight that where we find the most value tends to be not when the commodity is sort of at its peaks, but when it's sort of in the doldrums. But that said, we'll look at anything at any given point in time. And we've been keen to get some uranium in the portfolio. As you know, our strategy really is to broaden out the portfolio such that we've got exposure to a broad breadth of mining commodities. So we'd like to add more copper. We'd like to add other commodities as well, including uranium. It's just a matter of, as I said, really the key is buying assets well. So finding the right uranium assets, I don't think there's... it's not in our interest to try to fool the market and just snag some uranium royalties for the sake of the headline. We want to make sure that when we make acquisitions, they're good quality royalties that will add to our future revenue profile.
Do you think people can expect you to make any particular acquisitions during the second quarter? We are unbelievably nearly there already, and people, I'm sure, will be interested to know what it is that you actually focused on at the moment, Adam.
Yeah, it's always hard to sort of pinpoint exactly when a deal's going to get there, but I can tell you that we're working on quite a few things. Look no further than just last year, we did 5 acquisitions, 4 of which were pretty material for us. It's a good market for us to be deploying capital. Our share price is under pressure, like everybody's function of being a public company. But as a capital provider, these are the kind of markets you actually want. Everybody's under pressure. They need capital. There aren't ready sources of capital. Thacker Pass is a good example. 10 years ago would have been really unusual for an automaker and a U.S. government to fund construction of a project, but that's what's happening. So for us, it's a good time to deploy capital. We're pretty busy and can look to continue to add more assets over the course of this year.
All right, then. So aside from the fact that you are keen to keep adding assets, why do you think that people should be adding Trident to their investor watch list?
Yeah, I think a few reasons. I think everybody needs to have real assets in their portfolio. You don't have to look very far to see why. Obviously, inflation's coming back off, but commodities are sort of a key way to offset exposure to inflation. And so then the question is, how do you get that exposure? Do you want to go out there and pick junior miners that you think are going to outperform? Do you want to just buy sort of the major miners, but they're pretty well priced? I think royalties we found is the best way to get that exposure. And my background is as a mining equities investor. So, yeah, I've played on both sides and can confirm I like royalties as a means to get my exposure to the mining sector. And then I think the Trident, as we've grown, we're more and more de-risked as we performed. I think if you look at where we were this time last year, Thacker Pass was still going through permitting challenges. The DOE loan obviously wasn't there. I think maybe General Motors had been announced at this point in time, but there was still some risk on that asset. And then those 4 acquisitions last year that I alluded to, those hadn't been done. And our balance sheet, our cash position was roughly the same, but we had much higher cost debt. You fast forward to today, effectively our share count is roughly the same. Thacker Pass has been massively de-risked. We've added 4 acquisitions. We've lowered our cost of debt with the recently announced revolving facility with BMO and CIBC. Sort of everything has moved forward in the right direction. We couldn't be happier with the portfolio. And yet our share price is off sort of 35% from where we were this time last year. As I said, function of the markets, nothing fundamental that we can see with our portfolio. So I think if you want to get exposure to commodities in your personal portfolio, I think Trident is one of the best ways to do that.
I think notably with your share price as well is that despite the fact that a lot of people have continued to struggle, your share price that may be down on the year has been virtually static this calendar year. So by no means the bloodbath that you can see with other stocks anyway. So we'll leave it there anyway, Adam, but a pleasure to get the chance to chat with you. And we'll catch you again very soon here on focusIR.
Great. Thanks.